It was a mixed day on Wall Street with the S&P 500 and the Dow Jones Industrial Average closing lower fractionally. However, the NASDAQ Composite and the Russell 2000, which have emerged as leadership groups, did manage to close at all-time closing highs here today. The NASDAQ Composite actually closed with a overbought cluster signal. Now, part of the enthusiasm around tech stocks was the news that Apple is going to be entering the self-driving car arena perhaps as soon as 2024. So that got a few extra stocks moving in the right direction there. So we'll take a look at all of that, see what it means for our posture. Then we'll get into our trade application example, where I wanted to focus on a bullish swing trading idea on a stock that's popping back above its 30-day moving average and shows some promise with a bullish divergence signal. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's December 22nd, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down to the description area to sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZ. I'd encourage you to follow me if you're not doing so already, and we really appreciate those of you that click like and retweet on these Market Outlook related tweets. And then last but not least, we have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, so let's go ahead and move on over here to the Thinkorswim platform. And before we get started here tonight, a real quick programming note. Just be aware this will be my last presentation of 2020. As many of you know, we go dark here at Market Scholars between Christmas and New Year's. And so I won't be with you guys here next week. And I'm taking this Thursday off, which will be Christmas Eve. So anyway, I'll see some of you, Premium and Plus members of Market Scholars, tomorrow morning for my factor-based swing trading class for my final presentation of the year. Otherwise, we'll kick back into swing here the first week of January. And of course, wishing you all a very, very happy holiday season. All right, so as we take a look here at our 4 grid, remember this is chart 4B for those of you that are premium members following along at home with your own package, your own charting package. This will show us all 4 of our U.S. equity indices side by side, so that way we can kind of get a sense of, you know, whether everything's kind of moving in unison or if there's any distinctions we need to be aware of. And as I mentioned in the intro, it was kind of an interesting day because we had a rare day of division between the market. You can kind of slice this graphic into an upper half and a lower half. The upper half, the S&P 500, was down 0.21% today. Dow Jones Industrial Average was down 0.67% today. On the other hand, the lower half, the NASDAQ Composite, was up 0.51% today, and the Russell 2000 was up 0.99% today, so nearly a 1% move there out of the Russell 2000. And you can see that the NASDAQ Composite had a new high here today on an intraday basis, so that's why you're seeing that green flag show up there in the label, and you can see that kind of little flag showing up there above today's candle as well. The Russell 2000, you don't see that same scenario, and the reason for that is we didn't touch an intraday high here today. We touched that just a couple of sessions ago there on the 18th. But today we did close at a new closing high. So on that particular candle, we went up, touched a high on an intraday basis, and actually closed a little bit lower that day. Today with where we closed, we didn't quite breach the intraday high, but we did close at a new all-time closing high there. So again, those are our leadership areas, and they have been for quite some time, right? We'll talk about this again tomorrow in my factor-based swing trading class, but you know, as I've been sharing with you guys here in this presentation for the last, I think it's 7 weeks in a row now, we have seen that the low size factor has been leading on my factor selector tool that I use for that class, suggesting that those smaller companies are a leadership area. And then we've even received a shot in the arm here recently from momentum stocks again. And many of those momentum stocks are those NASDAQ kind of work from home software types of companies. Peloton, one good example of a stock that was just absolutely erupting today. One of the stocks we own in our top-down trend trading class that I teach on Mondays. In fact, there was another bit of good news on that front for those of you that attend my Monday top-down trend trading class. If you were in class on Monday, I was saying if we're lucky enough and we're good boys and girls, maybe Santa Claus will come to town for us and get us a double in our Chewy position, because we were getting awfully close to it, and indeed that did occur today. So I did send out the telegram and updated the other information with that. But that's actually our fifth time this year that we've had a stock double in that portfolio. And what we do in that particular trend trading account is we sell half of our position, therefore pulling our original investment out of that trade, and then we continue to hold the remaining shares indefinitely in what we call our coffee can portfolio. And so we are feeling very thankful that we've had that opportunity 5 different times this year, and that entire portfolio is up 35% on the year, not including dividends. It was up, I think it was 32% just yesterday, but we had another shot in the arm yesterday afternoon and today. So we've had quite the run in that top-down trend trading class, and I know many of you have experienced great returns this year as well if you've been focusing on those momentum stocks, many of them, again, coming straight from the NASDAQ composite. And so if you're looking for opportunities out there, perhaps that's a good place to be trying to hunt them down in this market we find ourselves in that seems to want to take on risk. And again, if you're not familiar with how to trend trade and how to use kind of the 3 green arrows philosophy, I would invite you to join me in my Monday top-down trend trading class, where we look forward to 2021 with just as much eagerness as we do every year, and we're looking for more excellent returns going forward. Obviously, I can't guarantee that, but we're going to do our best to try to achieve that. And perhaps if you've got little extra money sitting around after paying your Christmas bills, maybe you'll look to join Market Scholars to join that class in 2021. Anyway, as it stands here, we do have green background on all 4 of these charts, signifying that we do have strongly bullish postures on all 4 of our charts. The one that is probably the most concerning in terms of potentially going to a bearish posture if things unfold the wrong way would be the Dow Jones Industrial Average. You'll notice that it is getting awfully close to breaching that 30-day moving average right there. So let's keep our eye on that. We would expect that holiday trading will be quite quiet in coming weeks, but you never know what sort of news story might come out of nowhere with the coronavirus and Brexit and everything else that's going on that could disturb that. So hopefully the markets are quiet and it allows the Dow Jones to continue to glide above that moving average. But if we do start seeing that get breached, then there is that possibility we'll go to a bearish posture on the Dow Jones Industrial Average. The other charts are looking like we're in pretty good shape. Now, I want to also address this real quick. On the NASDAQ composite, you'll notice that we have what's known as an overbought cluster signal. You'll see this little red dot on the chart right there, and then you'll see the same red dot on the corresponding price channel up above. And what that signifies is when we have all 3 of our different colored lines on the market forecast technical indicator in the upper reversal zone on the same day. So in this particular case, we've got the green, the red, and the blue lines all here above 80. And you can kind of read those in the label down below here as well. The red line's at 89, blue line's at 83, and the green line is at 97. And so that sets up what's known as an overbought cluster signal. Now, just because we received one of those does not necessarily mean that we have to assume that things are going to spiral out of control to the downside or anything along those lines. As I try to remind you guys regularly, in the research that I've done when looking at kind of the next 30 days after a cluster signal has formed, at least on the S&P 500, the overbought cluster signals are effectively a coin flip. In other words, half the times they continue to rise after that for the next 30 days, and half the times they fell a little bit from that level. The oversold cluster signals are much more important. Those are the ones that we saw a great hit rate on, where if you bought the market on an oversold signal, a month later, much more often than not, you did find that the stock market was up. We have a good example of that indeed here on the Russell 2000. You can see on September 24th, we received this green dot showing up as an oversold cluster signal, and that would have been an awesome place to be buying the Russell 2000 when it was down there close to 1400 as we're knocking on the door of 2000 right now. So those ones, in my opinion, are much more important to identify and potentially trade off of. When we receive the overbought cluster signals, it's more of just a recognition that, yeah, we've had a good run here. It is possible that we need to burn off the fat a little bit. Perhaps that means a little bit of a give back in the market. Another possibility is that we just go sideways for a while, or perhaps just drift up but not go up at the same rate that took us into this overbought cluster signal. So we'll keep our eye on that until we start seeing significant support levels breached. We're probably not going to pay too much attention to it, but it is kind of worth noting that, maybe some of you will want to sell some calls against your position or do something where you introduce a few more bearish trades into your already bullish portfolio with the recognition of that overbought cluster signal. All right, let's go ahead and now take a peek here at our next chart setup, and this one will be our 3 green arrows chart setup. This is chart 4D for those of you that are following along at home. And as it stands right now, we actually only have one chart that has a 3 green arrow signal, and that's the NASDAQ composite. You will see here that we received our 3 green arrow signal on the NASDAQ most recently here on December 17th. That's on this candle, and that's why to the right of that, you'll see that light green background color. Again, that's specific to this chart 4D in this case. So that signifies that, hey, this green arrow kind of completed the series of the 3 green arrows. The other 2 had retained their green arrows from quite some time ago. On the 30-day moving average, the NASDAQ has had a green arrow since November 4th, and on the stochastics, the NASDAQ has had a green arrow since November 16th. So we had this little period here where we had a slight loss of momentum to enter into that red arrow, and then we just got that back here about a week or so ago, and we continue to maintain that 3 green arrow signal to this day. With the others, we're kind of struggling on the MACD histogram. So you'll notice on the S&P 500, we have a red arrow on the MACD histogram. Same thing can be said here for the Dow Jones Industrial Average, and the same thing can be said here just barely on the Russell 2000. So basically, that's a sign that while the markets have been drifting higher, the momentum of that market has not been as strong as it once was. So with the Russell 2000, I do think there's a pretty decent chance we're going to get that green arrow back here very quickly if we continue to have strong days like we did today. It'll take a little bit more of an effort out of the Dow Jones Industrial Average and out of the S&P 500. You can see those red bars on the MACD histogram are a little bit bigger than what we see down here, where you can barely even see it on the Russell 2000. So in other words, the Russell 2000's MACD histogram is already close to the 0 line. It wouldn't take much to go above the 0 line, and then when that does, the green arrow will come back into place, and then we'll have 3 green arrows on the Russell 2000 as well. So look for that to occur perhaps later this week. All right, let's go ahead and take a look at our longer term chart now, and this will be chart 4C. And this is our 1040 crossover method. We don't spend a lot of time on this. Reason for that is that the trade signals are not all that sensitive. You don't see a whole lot of bullish to bearish to bullish to bearish types of signals. You get them occasionally, maybe a couple of times per year. But just to catch everybody up to speed in case you're new to the video, this 1040 crossover that we're referring to can be kind of visualized on our chart by looking at the orange line representing the 10-week moving average, and the blue line would represent the 40-week moving average. And we're just simply looking for the crossovers of those moving averages themselves. So as an example, we had a crossover of the Russell 2000 here back in the first week of August, and of course we've had an eruption higher to that point. So we had a bearish crossover that then morphed into a bullish posture and now has continued to rip to the upside there. The others have already kind of showed us that quite some time ago, like for the NASDAQ composite. We've actually had a bullish posture going all the way back since May. but we haven't had as much of an upward ascent here recently as what we are seeing with the Russell 2000. Russell 2000 kind of feels more like a catch-up play than the others. The others have been kind of drifting higher for years. Remember, the Russell 2000 just broke to a new all-time high here about a month and a half ago. Previously, we had an all-time high back here in August of 2018. That was not the case on the other three indices. So the Russell 2000 was a laggard up until probably you could say this most recent crossover of the 10-week moving average going up over the 40-week moving average. So nothing new to share with you there. It's the same old, same old. We continue to have longer-term bullish postures using that 1040 crossover method. All right, let's go ahead and pop on over to the internet here briefly. I always like to get an opportunity to say thank you to those of you that help support this video, and I appreciate those 114 of you that did so for me the last time around. I'm always striving to get to triple digits. You guys rarely let me down, so I really appreciate that. I know many of you feel like the amount of time that David and I spend producing these videos is well worth the 5 seconds it takes to click the word like. So thank you for that. It goes a long ways. Also, earlier today, I taught my final dividend growth investing class of the year. Some of you saw me tweeting about that here earlier today. Last year on my final dividend growth investing class of the year, we bought Albemarle, which is tied into the electric battery space and as a lithium miner, and that stock has more than doubled over the last year since we purchased it. So the pressure was on for our class here today to come up with something reasonably strong to compare that to. So we'll see if that one ends up doing well for us going forward or not, but it was in the consumer discretionary space. For those of you that like a deep dive type of analysis, we have what's known as a head-to-head matchup, and I use a lot of research resources, including Value Line and Morningstar, our dividend stair-step charts, the CCC spreadsheets, all different types of things. So if you like kind of that heavier analysis that's not quite as much into technical analysis and favors fundamental analysis, I would encourage you to watch my dividend growth investing classes that I teach on Tuesday mornings if you are a plus or premium subscriber of Market Scholar. So make sure you check out that recording. David taught his directional option strategy class as well. And then tomorrow, as I mentioned earlier, I'll be teaching my factor-based swing trading class first thing in the morning, which will be my final presentation of 2020. And then David will be teaching his options inventory class at 2 p.m. Eastern Time. Then I should also mention this. David switched his time on Thursday. Remember, that's Christmas Eve, so I think there's a holiday shortened session that day. He moved his class time up from the normal time period. He'll be teaching portfolio management with ETFs on Thursday at 11 a.m. Eastern Time. And from what I understand, he's going to be doing kind of a year-end recap type of a class, similar to what I did for my top-down trend trading class on Monday. So if you're interested in hearing his excellent thoughts about the market and the macroeconomic background and how it affects the various ETFs he's trading, you'll want to check out that particular presentation on Christmas Eve at 11 a.m. Eastern Time. Also, just to make sure everybody's up to speed in terms of our premium members, for our coffee can stocks, so again, there's 5 of them now that we've had that have doubled for us. I did put together some transaction notes for you guys. Now, again, this is something that is only available for premium members of Market Scholars, but if you're one of those, in order to check out those transaction notes, you would come over here to our website and you would hover your mouse over Trading Rooms, go to Class Forums, and then click on Top-Down Trend Trading, and you should see that post right up there at the top since I just made that post here late this afternoon. And then also real quick here on the sector selector, remember I put this together on Friday evenings, so this is a couple days old at this point, but did want to share with the audience here that we did see a bit of a letdown there out of energy. For 2 weeks, we had energy as kind of the top sector there. Now remember, energy had basically its best month in history in the month of November, so it kind of was shot out of a cannon there. Perhaps overshot its target a little bit because now it's kind of settling back into the middle of the group here on the most recent rankings. Back up at the top is consumer discretionary for the very first time since going all the way back here to October. It is now the king of the hill, so to speak. Materials stays at number 2. Technology moved up 1 slot to number 3, and then industrials moved up 2 slots up to number 4. So, for those of you that attend my top-down trend trading class, you'll know that we are literally stuffed to the gills on all 4 of those top areas. We've got 5 stocks each in our actively traded account in each of those sectors. So anyway, I am glad to see that we've benefited from those trends and that this sector selector has allowed us to make wiser decisions as the year has gone on to produce stellar return numbers for that top-down trend trading class. All right, let's go ahead and get back on over here to the Thinkorswim platform now. And we're going to take a look at some 12 grid analysis now, starting with chart 5A, which will be our asset class 12 grid. Now, reminder, when this pulls up here, should remind you of Christmas with all the green and the red going on, but when you're looking at the 12 grid, the background color of the charts will signify what the current intermediate posture is for these different securities. And so if the background color is green, that means we have a bullish posture according to the market forecast technical indicator. And if the background color of the chart is pink, then that means that we have a bearish posture. And there are 2 different shades of green and pink as well to signify either bullish with a strongly bullish bent or a weakly bullish bent. So for instance, up here, the S&P 500 has that dark green background color. That signifies a strongly bullish posture. Just the chart right below it, TLT, long-term U.S. Treasuries, has a light green background color signifying that we have a bullish posture, but it would be considered a weakly bullish posture. And the same thing could be kind of used on the pink charts. You'll notice that the US dollar would be considered to have a strongly bearish posture right now, whereas something like foreign bonds up here with that lighter shade of pink would be considered to have a weak bearish posture. So as we look at these charts here, let's point out some of the things that caught my eye today. First of all, it's worth mentioning that the US dollar rose fairly significantly today. It was up over 0.5%, and for a currency like the US dollar, that's actually considered a big move. Now, where that puts us is not really anything out of the ordinary. In other words, I've been talking about this concept for several weeks at this point, that we've reached oversold territory. You can see all of these little green dots showing up. And so we should be on the lookout for a potential reversion to the mean type of a move, which is exactly what we are experiencing here in the last 3 or 4 sessions. The question is, where does it take us? Is the reversion to the mean move strong enough to actually change the trend from bearish to bullish? Or is it just a minor reversion to the mean move where we roll over once again and maintain the previous trend? And my mindset right now, until proven otherwise, is that we will maintain that bearish trend in the US dollar despite having strength for the last 3 sessions. So we'll see if that happens or not, but obviously one thing you're going to want to pay attention to, remember, even if you're not going to have the benefit of having all of these videos in the coming weeks because David and I are spending time with our families that are home from school and different things like that during the holiday season, those of you that are premium members of Market Scholars that have access to these charts, you're going to still want to stay with your own routines and pull up these charts from time to time just to make sure things are going the way that you assume that they should be going. And one of the things I would be looking out for is what's happening with the US dollar versus its 30-day moving average. As long as it stays below that 30-day moving average, I'm going to assume that the trend continues to be bearish. Now, remember that the dollar has an impact on things like commodities. So the charts to the right, you will see at the same time that the US dollar is considered weak, or bearish in this case, you will find that the gold chart and the oil chart are both green. So that makes sense. Weak bearish dollar, or a weak dollar, bearish dollar, would usually combine with a strong or bullish commodity market. And that's effectively what we've seen. Now, admittedly, the oil market has been much more strong than the gold market from my perspective. You can see that we've had a really strong move here on oil for really the last 2 months. With gold, we've had kind of this oversold cluster signal down below here that went up to a reversion to the mean move, and it is promising that it's kind of holding these levels above the moving average so far. But considering we had a similar circumstance back here at the beginning of November that ultimately failed, I'm just not sure how trustworthy I am of gold at this moment in time, despite having that bullish posture there. I feel a little bit more comfortable with oil because the trend has become more established. As you can see here, the moving average on the oil chart is green, telling us price is above a rising moving average. The moving average color on the gold chart is yellow because there's a conflict going on. The moving average itself is going lower even though price is above that moving average. So of the two, I do tend to prefer the oil chart a little bit more than gold. But it doesn't mean that I can't change my mind, right? If the evidence starts taking shape in such a way in the coming months that suggests that gold is finding a bottom, I'd be more than happy to take a look at bullish trades there. But until then, I think I'm going to remain a little bit more hesitant towards that particular asset class. In terms of the foreign stocks up above, and by the way, gold and oil were both down today. So on a day when the US dollar was up, both gold and oil were down, and on a intermediate time period where the dollar is weak, the intermediate time period on gold and oil is strong. And that holds that relationship that we have come to expect between the US dollar and commodities. Up at the top here, you will see that we had a down day across the board, no matter what segment of the globe you were dabbling in. The US market actually held up a little bit better here today. It was only down 0.17%, whereas EFA, which tracks the developed foreign stocks, was down a little bit more at 0.25%, and then the foreign securities from the emerging markets perspective was down 0.8%. And again, that makes sense there as well. Remember that when the US dollar is weak, that tends to benefit foreign securities over US securities. In this case, we had a big up day for the US dollar, so it would actually benefit US securities on a relative basis a little bit more so than the foreign stocks that are out there. So again, that relationship also held true. Let's take a look at our sector 12 grid now, and that's chart 5C. As we pull this up here, it's kind of a mixed bag. You've got your bottom rung all in the pink charts. And again, kind of like I mentioned here, either Thursday or Tuesday last week, can't remember what day it was, but I was mentioning that this 12 grid is set up in such a way on purpose. In other words, the defensive sectors are all on the bottom rung. You've got your healthcare, staples, utilities, and real estate. And so those areas are the ones that on a relative basis have been weaker than the other more cyclical areas of the market that market participants are willing to take risk with. Things like technology, which was up to yet another all-time high here today, has been performing pretty well. Consumer discretionary had been, but we had that big event where Tesla was added to the discretionary sector here. Remember, that was not the case a week ago. Tesla was added to the S&P 500 and thus now added to XLY as well, and is now the second most influential member of XLY. So if Tesla sputters a little bit like we saw here in the last couple of days, then discretionary is going to have a harder time now staying strong. On the other hand, the opposite can be true as well. If Tesla continues to just simply rip higher, then XLY will get a slight advantage with now having Tesla in its holdings. But for the most part, the market was down today, and so it's no surprise to see that most of these sectors were down as well. Really, the only noteworthy exceptions of that would have been technology up 0.87% today, and then real estate had a rare day of outperformance up 0.7% today. Otherwise, we did experience a down day across the board. One thing I should point out is that energy is kind of rolling over here. Now remember, this is not oil itself. These are energy stocks like Exxon and Chevron and the like. They actually closed a little bit below their moving average. That was the first time since going back here, since they had that massive run on that Pfizer vaccine news. This was that Monday of the Pfizer news where we ripped higher. This was the close Friday just preceding that. So this is the first time we've closed below the 30-day moving average on energy stocks since prior to that Pfizer vaccine news. So we're going to keep our eye on that as well. Energy stocks have kind of been all over the place here recently. And then also wanted to point out real quick here, back to the internet, that industrials did have a nice little move higher here. I think I mentioned that before, but just to reiterate it, they were up 2 whole slots week over week. Reason I'm mentioning that is our trade application example is going to tie into that. So I'm going to come over here to our swing trading 1 grid, and I'm going to pull up ticker symbol CAI International. And you can see here that this is a stock that has kind of had a weak performance here in the last, let's call it 2 or 3 weeks or so. But recently, it's kind of been formulating some sort of a support level right around its 30-day moving average. In fact, today you can see that we closed back above that rising moving average. It's easy to visualize that because we can see the yellow moving average changing to green here before our eyes, signifying price is now above that rising moving average. We also have what's known as a hold signal. For those of you that used to attend classes at David and I's old employer over there at TD Ameritrade Invest Tools, you might be familiar with that idea of CAHOLD, but to catch everybody else up to speed, it's just an acronym, and it stands for close above the high of the low day. Well, in this most recent move, this was the low day, basically yesterday. Today we closed above that high, and we closed above that important rising 30-day moving average as well. It was an important enough day where we are up about 4.5%, where we actually changed the near-term posture from bearish yesterday, where we had this pink background color, to bullish today, where we now have this blue background color. This is the chart I use for my swing trading classes. This is chart 3A. The other thing that caught my eye with this one, along with it being an outperformer, so be aware the S&P 500 dotted line is below this company's price candles. So over the last 3 months, this company is considered a relative outperformer, despite having kind of a 3-week pullback that we're part of right here, that we're trying to bounce up and out of at this moment in time, and at least that's what I'm hoping. But what caught my eye with this one is that we have what's known as a bullish near-term divergence as well. Notice down below here, we have this blue line on the market forecast technical indicator. We've got this low that was established here on the blue line on December 15th. And then we have a slightly higher low that was established on the blue line right here yesterday on the 21st of December. Now, so in other words, we've got a higher low situation there with that technical indicator. Now, the candles associated with those 2 moments in time are this candle right here. We've kind of got that doji type of a feel to it. And then we've also got yesterday's candle right here. So in other words, the underlying indicator strengthened or got more bullish at a time that the price action itself became more bearish. We went lower lows here. We went higher lows down below. And so that distinguishes an interesting chart there that is known as a divergence that's taking place. In this case, it would be viewed as a bullish divergence. In other words, something is happening below the surface on the indicators that is telling the trader something that somebody who's just reading the Wall Street Journal and only looking at price action isn't privy to. Now, whether that ends up, being a successful way to, view this situation or not remains to be seen, but at least is a good example of a bullish near-term divergence there. So I've already done this trade, as is always the case. I've already sent out the Telegram information to those of you that are on our trade alerts that are premium members, so that way you can consider them while the market is open as well. But you can kind of see where I've got my zones established here, where my upside price target is up here just a hair below its previous highs, and then where my stop loss is here a little bit below yesterday's candle. So we'll see if that one can take off for us. It's just a simple stock trade there. I'll try to keep my eyes on these things, even though I'll technically be on vacation. I'll still be around my computers and things like that. So if I do see some of these transactions take place, I'll do my best to update those of you that are premium members on our Telegram app as always. So that's what I had for you here tonight. If you got value out of this presentation, I ask for one simple thing. Just simply click like for me there on Twitter. That'll go a long way to helping promote this product for us and kind of helping justify the amount of time that we spend producing these videos for you guys. But as I mentioned before, this will be my final market outlook presentation of 2020. So wanted to say thank you to those of you that have tuned in along the way. I hope you've learned a few things. It's been one of the most educational years you could have imagined. As somebody who's traded for over 20 years at this point myself, I can tell you that the year 2020 will be one of the most memorable that I'll likely ever have in terms of what did we learn, what sort of successes and failures did we have, and how can we get better as time goes on. So I hope you guys have enjoyed the presentations this year as well, and I'll look forward to working with many of you in 2021. So until next time, I want to wish you happy holidays, happy new year, best of success with your trades and your investments. Goodbye for now.